Welcome to Market Day Report. We don't have trade on Monday, as Monday is a market holiday, so next week is a 4-day trading week. So we got to get some trade done this week. And today, let's go to the corn market. Where are we? Well, we're moving higher. This is a market that's just been beat up this week. We've lost 5% of our value. For the month, we're down 4%, but the big one, year over year, the corn market down 13%. We are moving higher right now. Old crop, 424.5. It's up 4.25. Roll down to that D's contract. That's the new crop. Will we plant more acres or less this year? 449 on that. It's 2.5 higher. What about soybeans? We don't have the new crop here, but we are seeing unchanged on most of the contracts on the beans right now. Let's go to soy meal. Meal is moving higher after a day of lower trade yesterday. But what about bean oil? This is the one that's really been a shining star, if you will, up 15% year over year. 53s on most of those contracts. Let's go to the wheat market. We'll hit new crop. July, 8 higher, 541.5. Here's Kansas City. July's new crop here, up 9, 550.75. We open up the morning with spring wheat contracts moving higher, and the cotton market is on both sides, but just fractional moves. Sherman Newlin's with Risk Management Commodities. Hey, Sherman, to say it's been a rough week is kind of an understatement, isn't it?
Yeah, it's been a tough week for the corn market, especially, from the report on Monday, we got that, and the market is sold off sharply. I guess if there's something you could say nice about the corn, we haven't even come close to retesting that low we made on Tuesday at 417. So that's good. We're up 4 cents here this morning. Demand has been there, right? We're getting really good export numbers. We're having some flash sales of corn and soybeans both. The world's coming here and they're buying our grain. So that's good to see. Maybe we don't need to go down and take out those lows going forward. We had good ethanol numbers this past week as well. There's something there to take a look at. The ethanol industry is actually expanding this year, Tony. We're supposed to be building out about another 1 billion gallons worth of production, just plants expanding because of our tax credits that are available out there. And everybody's trying to, grind as much as they can. So, if all that could come online within the next year or so, or maybe a little bit longer than that, another 1 billion gallons of ethanol produced could use up to another 300 million bushels of corn. So that's something to think about. Not only that, but the Brazil ethanol industry is expanding. They're at 24 plants now. They're looking to build another 32 to 37 plants in the next few years. So their corn that they're going to be able to export will get tighter, I think, going on down the road. So maybe the corn market can find something here in the next year or so to rally around.
Hey, Sherman, while we're talking about that kind of quickly here, one of the byproducts of the ethanol process, the DDGs, dried distillers grains. Is there some concern about producing more ethanol and still having maybe a tighter market for DDGs?
Yeah, there's always the concern, but it's good cheap feed. It gives the guys in the livestock industry maybe more reason to try to expand. So I think that's good overall. Besides that, you had the RVO stuff come out yesterday from the administration. Maybe we can start crushing our way into using more of these soybeans here as well. Instead of having to rely so much on our export market, we just internally use our grains, which will hopefully lend to some higher prices for us.
All right, Sherman, hang on. We'll take a break. Back with more markets. This is Market Day Report. In Kansas, 233. Nobody's taking them at this point. The sellers waiting to find higher prices. Don't blame them. Will they get it, though? Maybe 234, maybe 235. We'll wait and see. Right now, live cattle futures, though, are pulling back to that 233 level, 233.5. Last check on the February, down 255. All contracts are in the red. And then the feeders, we've seen feeders up 7% month over month. The January contract set to expire, in a couple of weeks? 365.07. It's down 335. More active is that March, $3.50 lower at 361.05. And then the hogs got the hat trick yesterday, 3 straight sessions higher and we're higher again. April, 95.55 up 55 and holding the 107 handle for both June and July. Sherman Newlin's with Risk Management Commodities in Hudsonville, Illinois. Okay, thoughts here on the protein sector.
It's nice to see the hog market rally, and it's had a heck of a run, which kind of trying to continue that here today. I'm hearing some stuff about maybe tight feeder pig market coming, here in the future. So that could be lending some support here as well for the hog market. Cattle market wise, we've had a big retracement back up here in this cattle market, especially the feeder cattle. Can we go back up and check those old highs again? I don't know. Price of corn starting to go up. I mean, some sort of sell off here, probably not too unexpected. But going forward, do we open up the Mexican border at some point in time? You got to think that's going to happen at some point. So I'm not sure where the feeder cattle go from here, but some sort of sell-off is probably anticipated coming in here. The fat cattle market, again, they're strong, but I think they're going to be led by the feeders. We haven't had a lot of cash movement in the cattle market this week. Like I said, cutouts have been higher though for that. But going forward, does this market need to pull back some? It very well could.
All right, Sherman, always great to see you. Sherman Newlin's with Risk Management Commodities.